my name is Tracy Oliver, and I'm a realtor with Coldwell Banker.
And I'm Scott Tucker, a senior loan officer with PHH Home Loans.
Welcome to our next segment in our home buying series, this one about credit. You know, Scott, working with buyers through the years, it seems like credit is that one thing that is a little bit of an obstacle for buyers who are looking to get a certain type of loan, a certain amount of loan, and in some cases being able to buy a home altogether. So if you would, for us, sort of give us an idea of how credit does impact the home buying process.
Well, credit is actually one of the major tools that a bank utilizes in order to qualify a buyer.
Okay.
It's also one of the scariest things that most buyers really want to see. They always are a little bit hesitant to say, okay, where do I stand? But it is the most important thing you want to be able to do, to look at your credit, understand the credit scores and what they mean to you, and really how that relates to a bank and how they can qualify you on a mortgage.
All right, well, you mentioned the word score, and that's a little bit of a buzzword. So what are credit scores? And if you can explain a little bit about what they are and how they impact the entire process.
Sure. Credit scores are, and today credit scores are more important than anything else in the qualification process. Scores can actually range, so you have an idea of how they work. Scores can actually range from around 350 to around 850. The higher the score, the better. Most of the population is actually in the 700s,
okay.
So that's really good. But you do want to make sure you know where you stand. Now, how is a credit score determined, and really what is a credit score? A credit score is actually a computer-generated scoring system for your payment history that shows on your credit report.
Okay.
What happens with the scores itself, how is it determined? Scores are actually generated by the credit history that you have, how you have paid on your credit cards, the length of time your accounts have been opened, whether there are any collections or judgments, and the relationship between what you may owe on your accounts to their limits. Any accounts that you may owe more than 50% of your available limit, that will hit your credit scores negatively. Okay? In relation to the scores themselves, I mentioned that the scores can range from anywhere from 350 to 850. Anything above 740 on a conventional type mortgage would actually be considered to be an excellent credit score.
Okay.
You can be impacted on your interest rate for each 20 points below that. So from 740 to 720, you may have a different interest rate than if you're above 740. And as you go down every 20 points, again, that can have a much more negative impact to your qualification and the interest rate you may be able to obtain. Now again, that's on conventional mortgages. With FHA loans, they're a little more lenient. We talked previously about how FHAs are really kind of a choice for first-time home buyers because they allow a smaller down payment and they're more lenient on credit. You can actually have a credit score down to around 640 on an FHA loan and still be able to get the same interest rate that you would as on a 740 score with a conventional mortgage.
Okay.
Okay?
That's good. And you mentioned how your credit score does impact the interest rate, and I think that's an important thing not to brush over because that impacts, I'm assuming, the monthly payment that the buyer will have.
Most certainly. Based on using a $300,000 loan amount example, you can actually have a difference for each 1/8% in interest rate that you may be able to get. That could have an impact of around $50 a month in your monthly payment.
That's substantial.
So that can be substantial when you go to qualify and you being able to get the property you want. So maintaining your credit and keeping your credit in line is definitely something you want to be able to do.
That's good information to have. One of the things that I hear all the time from buyers, and I know you probably get these questions too, are how does a buyer go about improving their credit scores, and what things should they do and what things should they not do that may impact their credit scores that a lot of buyers may not even realize?
Well, the do's and don'ts of credit scoring is definitely significant and also individual. Your individual credit you may be able to do some things on your credit that other people may not. Some of the do's you want to be able to do is keep maintaining your credit on time, pay your bills on time, Maintain at least 3 lines of credit that's open and in use. So if you have a few store credit cards or a gas credit card, anything like that, make sure you have at least 3 lines open and that you're actually using them. If you have one credit card that you prefer to use now and you've got 3 others that are kind of sitting there and you haven't used them in a while, go out and buy yourself lunch, then pay it off when you get the bill. That will keep that account current and reporting current on the credit reports.
Okay.
That'll keep your credit history also going, which will, again, maintain your credit scores.
Okay.
Some of the things you don't want to do is you don't want to go out and open a bunch of new accounts because that will impact your scores negatively. You don't want to pay off a bunch of accounts and open one credit card as a consolidation loan.
Okay.
Because if you open that account and then close the other ones you're paying off, that will release that credit history on those, and now you're looking at just one credit card with no history and a maxed out balance. That can have an impact as much as 50 points on your credit scores.
Wow.
So the biggest thing that I can tell you is to look to your lender, be able to pull the credit report, review that with them, and if you do feel you want to make some adjustments, or the bank says, hey, maybe you can improve your situation by doing certain things, talk with your lender so that you can put that in place so you don't impact yourself the opposite direction that you want to go.
Good advice, Scott. And I know at the very beginning we said the first step in the entire home buying process is to sit down with the lender and get your pre-approval. It sounds like, aside from the pre-approval, there's some important steps of making sure you're prepared for the home buying process that you need to take in terms of looking at your credit with the lender. I know one question that comes up from time to time, buyers have a concern about having their credit pulled too many times. Can you address that?
Certainly. You can actually have your credit report pulled for a mortgage purpose, and the credit agencies can see what type of purpose the credit was pulled for. You can actually pull as many times as you need to within a 30-day period. And it only counts as one inquiry on your credit report.
Okay.
Similarly to car loans, when people go to get cars, every time you walk on a car dealership, they're going to pull a credit report if you're test driving a car. And people didn't realize that before. So credit bureaus are also recognizing that now as a one inquiry within a 30-day period. Thereby, it's not affecting the credit scores as greatly. So if you are doing any checking around and things like that, having multiple credit reports, although it's not recommended, if you're doing it within a certain period of time, it will not necessarily affect you negatively.
Terrific. Well, I think we learned a lot about credit today, and one thing that I think is important is that to dispel some of the myths of what you need to do to improve your credit or even be in a position to buy a house, you should probably sit down with that lender and look at your credit together. You may be surprised that you can, in fact, qualify to buy a house even if you have a small amount of debt, as long as your credit scores are good.
That is correct. And one additional thing I'd like to bring up as well. If you are looking at credit agencies or credit reports that are not pulled by your specific lender, you want to make sure that you address that credit report with your lender. Some outside agencies actually use different scoring ranges, so you may be thinking you have one credit score, but when you talk to your lender, it may be something different. So definitely, as you are getting to that step where you're going to buy a home, talk to your lender, have your credit report pulled by them, because that's the score they're going to be looking at and not necessarily the score from some outside vendor.
Good advice. Well, I think looking at credit and credit reports is still the scariest part of the process, but you've made it pretty clear that it is also a very important part of the process. Thank you, Scott.